Imagine a world where your investments quietly work for you, generating income while you sleep. Welcome to the universe of dividend investing. In this episode at Dividend and Conquer, we're diving deep into the art of creating a portfolio that doesn't just sit there but actively contributes to your wealth. Dividend investing isn't just a strategy, it's a journey. It's about choosing companies that not only share their profits through dividends, but also grow these dividends over time. This approach, when done right, can turn your portfolio into a consistent income stream. Think of it like planting a garden. Each stock is a seed that over time grows and bears fruit, in this case, dividends. And just like a well-tended garden, a well-managed dividend portfolio can provide a bountiful harvest year after year. Building a strong dividend portfolio. The cornerstone of dividend investing is selecting the right stocks. It's not just about high yields, it's about sustainability and growth. Take a company like Home Depot, for instance. With a modest yield, it may not look attractive at first glance, but its history of dividend growth tells a different story. Imagine you're at a farmer's market. You have a choice between buying a small young plant or a mature one that's already bearing fruit. The young plant, like Home Depot, may not offer much now, but given time, it's likely to grow and produce more than the mature plant. That's the kind of potential we're looking for in dividend stocks. Why focus on dividend growth? Because it's the growth that compounds over time, turning modest initial yields into significant income sources. This is the heart of dividend investing, not just receiving cash, but seeing that cash grow year after year. It's akin to teaching someone to fish rather than just giving them a fish. The initial dividend is your fish, but dividend growth is the skill that keeps on providing more fish in the future. Analyzing dividend stocks. To invest wisely, one must look beyond the surface. It's crucial to examine a company's free cash flow, the lifeblood of dividends. A healthy free cash flow indicates a company's ability to sustain and increase its dividends. Think of free cash flow like water in a reservoir. It needs to be sufficient not only to meet the current needs, like paying dividends, but also to ensure there's enough for future requirements like expansion and unforeseen expenses. Understanding payout ratios. The payout ratio is a key indicator of a dividend stock's health. It shows how much of a company's free cash flow is paid out as dividends. A balanced ratio, like Home Depot's, suggests a company is well positioned to continue its dividend payments while also investing in future growth. This ratio is similar to a person's savings and spending balance. If you spend all your income without saving, you may struggle in the future. Similarly, a company that pays out too much may not have enough for future growth or unexpected challenges. Common mistakes in dividend investing. It's easy to be lured by high yields, but beware. Companies like Verizon may offer attractive yields, but their slow dividend growth could be a red flag. Inflation and stagnant dividend growth can erode the real value of your income over time. It's like buying a car that looks good and has a powerful engine but consumes too much fuel and has high maintenance costs. The initial appeal may be strong, but the long-term costs can outweigh the benefits. Dividend growth versus high yield debate. The age-old debate in dividend investing: high yield or dividend growth? Experience and data lean towards dividend growth. It's not just about the income now, but the potential for that income to grow, outpacing inflation and boosting your purchasing power. It's like choosing between a steady, reliable job that offers annual raises and a high-paying, risky job with no future guarantees. The former, like dividend growth stocks, may start slower, but offers more security and growth potential in the long run. Success stories and strategies. Successful dividend investing stories, like those involving Broadcom, showcase the power of dividend growth. Investing in such companies at the right value can lead to significant yield on cost, meaning your effective return on your initial investment keeps increasing. This is like buying a house in an up-and-coming neighborhood. Initially, it might not seem like a lucrative investment, but as the area develops, the value of your property and your return on investment grows substantially. Future investment strategies. Looking ahead, the strategy remains straightforward yet powerful. Identify companies with potential for cash flow and dividend growth. Such a strategy ensures not just steady income, but also the potential for capital appreciation. This approach is akin to a navigator charting a course for a ship. By carefully selecting the route, or in this case, the stocks, and adjusting as needed, you can ensure a prosperous journey towards financial success. Lead into strategy section. Now let's shift gears and lay out concrete steps to build your dividend kingdom in 2024. This is a roadmap to transform your portfolio into a fortress of wealth generation. Step 1. Establishing a solid foundation. Start with a strong base. Your dividend journey begins with a solid foundation. Focus on companies with a proven track record of financial stability and consistent dividend payments. These are your portfolio's bedrock. Step 2. Diversification for stability. Diversify your holdings. Don't put all your eggs in one basket. Spread your investments across various sectors and industries. This diversification reduces risk and ensures a steady flow of dividends regardless of market fluctuations. Step 3. Focusing on growth potential. Prioritize dividend growth. Look for companies that have not only sustained but also consistently grown their dividends. A small yield today can grow exponentially over time, contributing significantly to your income stream. Step 4. Understanding financial health. Analyze financial health. Dig into financial statements. Pay special attention to free cash flow and payout ratios. These indicators will tell you if a company's dividend is sustainable and if there's room for growth. Step 5. Regular investments and reinvestments. Consistent investing and reinvestment. Regularly contribute to your portfolio and reinvest your dividends. This practice leverages the power of compounding, accelerating the growth of your dividend kingdom. Step 6. Stay informed and adapt. Keep learning and adapting. The market is dynamic, and so should be your strategy. Stay informed about market trends and be ready to adjust your portfolio as needed. An adaptable investor is often a successful one. Step 7. Patience and long-term vision. Patience is key. Building a dividend kingdom doesn't happen overnight. It requires a long-term perspective and patience. Trust the process and let time and compound interest work their magic. As we conclude this guide, remember, the journey to a dividend kingdom is both exciting and rewarding. With these steps, you're not just investing, you're building a legacy. Don't forget to like, subscribe, and join us at Dividend and Conquer for more insights into the world of smart investing. Before you go, I'm curious, what strategies will you be adopting for your dividend investments in 2024? Let's discuss in the comments below. Thank you for tuning in. Keep investing, keep learning, and let's master the art of dividend growth together. Remember, we are not financial advisors, and the content presented in this video is for informational and educational purposes only. Always consult with a licensed financial professional before making any investment decisions.